Welcome back. 1% higher for the mid-cap index as well as the frontliners. The Sensex looking strong at 50,200 and the Nifty as well moving past some previous hurdles now at 15,087. Dish TV, TCI Express, Torrent Power, Adani Transmission, Chennai Petro as well as PNB Housing, HPCL are looking strong, and it's JK Lakshmi Cement that's on top of the heap with a 7.5% gain, and that's largely on account of the strong Q4 numbers. Dr S Chouksey, the whole-time director at JK Lakshmi Cement, is with us right now to talk a little bit more. Thank you so much for taking time out and joining us on ET Now. Walk us through how the volume growth has been for the quarter. You managed to outpace your peers for the past few quarters. So what have been some of the key volume growth drivers? What are the realization trends?
First and foremost, we recorded a heavy volume growth in the fourth quarter. We did close to 18% growth if I combine cement and clinker. If I were to just take the cement alone, it would have been more than 31% growth in our volumes. In terms of the realization, we have seen an improvement in the realization. Both on a year as a whole as well as in the fourth quarter, we recorded some gain there, about 150 rupees a ton, and that helped us to improve both the volume growth and the realization growth, and driven by our improved efficiency, especially with respect to the logistic cost or product mix. We have been able to do reasonably well in terms of our EBITDA growth.
And what about the outlook on your pricing trends? How has that shaped up in some of the key areas for the company? And do you think that, this kind of a healthy trend in pricing could sustain?
Yeah, the sustaining of the prices have been a big challenge all through because of the fall in the demand during the entire year, for that matter. Second wave, of course, is a very big challenge. You see, in the first wave, we had a very good rural growth, and that gave us a very good trade market growth in the year as a whole, and even the fourth quarter. However, going forward in the month of April and now, what we are witnessing is that the wave 2 is impacting the rural market in a big way, where only now what we are finding is that major demand is coming from the non-trade segment or the key infra segment or the bigger housing projects, where the pricing is a big bit of a challenge. So I think going forward, till the time the wave 2 really subsides, which we are hoping that it will happen sooner than later, not more than third week or at the max fourth week of May, things should get stabilized. And then I think we still have a month before the monsoon, month and a half, because we are predominantly north plus Rajasthan and Gujarat. So while Gujarat sees an early monsoon, Rajasthan and north will see a monsoon really picking up by middle of June. So we get a clear month and a half of good demand, and we are quite hopeful that we'll be able to, make up for some of the volume loss that we are witnessing right now. And maybe if the demand is good, the price can also get some corrections.
So cement companies are seeing a bit of worry from the increased fuel and freight cost. How would you see the margin impact going ahead? Will it have an impact on the overall cost?
You are absolutely right. The prices of the fuel as a commodity is a matter of great concern for the industry. We have already seen it impacting our costs by close to 70 to 80 rupees a ton in terms of the final product. You see, the only way one can really make up is, of course, the improved efficiency, but there's a very little headroom available there. We are already at the peak of our efficiency. So I think we are looking for better times to come when the demand picks up. There's bound to be some increase in the pricing. Some prices have softened, that needs to be corrected. And same goes for the fuel price. the what you call the diesel prices, which has a direct bearing on the logistic cost. The petroleum prices, the diesel prices increased even last year. We saw almost a 13 to 14% increase in the diesel price, but we could partly mitigate, though our freight costs have gone up per ton, but we could partly mitigate by much improved efficiency of our logistics. So those improvements will continue, but if the diesel prices are likely to go up further, then of course, again, that will have to be passed on. We have no choice.
Is there any demand hit for the product in the second wave, especially as both infra real estate projects stand as a standstill? The issue of workers is coming in once again.
You see, the labor migration has not been that big a problem in this particular wave. At least not that what impacts the industry. Where it impacts is at the end point, the demand point, and especially the individual construction. So that's actually a further blow to apart from the rural impact, the non-availability of labor for the individual construction will have some bearing, but I don't see that really as a big challenge. The bigger challenge will come as to there could be some payment issues in the market, because this time around, many of the cement dealers have been impacted personally. Many people have seen very serious repercussion of the COVID in terms of the breadwinners losing their lives, or serious sickness issues. That has affected some bit of fund availability in the market. So I think that is a bigger challenge. But I think all this will get back to normal soon once the COVID subsides. Because I believe the infrastructure and the construction is bound to increase again, because the pandemic has given a lot of lessons to the people. You see, so while there'll be a lot of office space might be freed, but now people will go in for more of even a smaller area, but individual residential units. Because, people have seen the pitfall of the multi-storied, people are not able to get out, the moving in the lifts are all an issue. So, and then secondly, when a lot of work from home will take place, there'll be a lot of people who can very conveniently shift to places away from the offices or away from the main cities. So I see a change in the construction pattern. The working style changes. They will have some medium-term impact, whereby the construction will get further flip, and infra, of course, will continue. We have seen the inadequate infra affecting or encouraging the corona spread more, not just in terms of the hospital or the medical infra, which needs to be shored up to meet the challenge of wave 3, if any, but other infra also needs to be pushed up. So I am looking for that the moment the corona gets subsides, there would be a lot of traction in the infra construction and housing, as I mentioned. So I do not really see a challenge in the construction activities not picking up. In any case, that is one of the first economic activity, to my mind, which will come into the play as soon as the COVID gets subsided.
Volumes are you penciling in for yourself as well as the industry? If you could give us an idea on those numbers and how you see pricing trends emerge?
You see, there's no gainsaying that volume will definitely be lower than the Q4, certainly. But I feel it will be better than the Q1 of the previous year. That's what my reading is, and that is what I would peg both for the industry as well as for ourselves. For instance, in the month of April last year, we saw a dip in close to 40% of our over the corresponding April last year. But this April, we were certainly much better than the previous April. May will not be that bad. So overall, I think compared to the Q1 of the previous year, we as well as the industry should definitely be doing, I would assume, 10 to 15% better than the last year. That's a very big guess that I'm doing, and hoping that June will pick up.
Okay. And talk to us about the status of the Udaipur expansion, the demand outlook in Odisha, in Chhattisgarh.
Well, Chhattisgarh, things have been fairly bad. Number one, the lockdown has been very strict there. It is still continues up to 31st May. And we have seen the number of cases very high in Chhattisgarh. Odisha was comparatively better in the month of April, but now Odisha also has picked up in terms of number of COVID cases, etc. So I do not think any state would be really spared the way this disease is spreading, or now getting contained in some states. So I think it will not be very different than what I talked to you about the overall. Last year, in wave one, Chhattisgarh and East market performed quite well, was not impacted that badly. However, in wave two, it has been impacted much more adversely. But I feel that it has a lot of, both these states have a lot of rural markets, and that gives a hope that possibly the corona will subside, because there in both these states, the population density is much less than what we see in north, in Rajasthan, Haryana or Gujarat. So I would expect that things should improve there real fast. So that's again a wishful thinking, but that's a trend that we are witnessing right now.
All right, we'll leave it there. Thanks so much for joining us on the show, Mr. Chouksey, and sharing with us some of the latest there, JK. Okay, we've completely run out of time. So from the entire team, thanks for watching, and do stay tuned. Lots more coming up on ET Now.